Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 24th, 2025, and we're diving into Honeywell's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Honeywell's Q2 2025 results are quite intriguing, especially with their strategic initiatives and financial performance exceeding expectations.
Revenue and profitability overview. Let's start with the top line. Honeywell reported sales of $10.4 billion for the second quarter, marking an 8% increase year over year. John, what are the key drivers behind this growth?
Absolutely. The growth was primarily driven by double-digit organic sales increases in defense, space, and UOP. Building automation also played a significant role, with segment profit increasing by 8% to $2.4 billion. This indicates strong demand across various sectors and effective execution of their strategic initiatives.
And how about their profitability?
Honeywell's operating income rose by 7%, and their segment margin contracted slightly by 10 basis points to 22.9%. Despite this, the overall profitability remains robust, showcasing their ability to manage costs effectively while driving growth.
EPS performance and analyst expectations. Now let's talk about earnings per share. Honeywell reported an adjusted EPS of $2.75, which exceeded the analyst forecast of $2.64. John, what does this tell us about Honeywell's performance?
This is a significant beat, with the adjusted EPS growing by 10% year over year. It reflects Honeywell's strong operational performance and effective cost management. The fact that they exceeded the expectations of 9 analysts highlights their ability to deliver consistent value to shareholders.
Strategic initiatives and acquisitions. Honeywell has been active on the strategic front with several acquisitions and divestitures. Can you elaborate on these moves, John?
Certainly. Honeywell closed a $2.2 billion acquisition of Sundyne and announced a £1.8 billion acquisition of Johnson Matthey's Catalyst Technologies. They also completed the $1.3 billion sale of their PPE business. These moves are part of a broader strategy to optimize their portfolio and focus on high-growth areas.
And what about their portfolio review?
They concluded a comprehensive portfolio review initiated by CEO Vimal Kapur. This review led to strategic decisions, including the evaluation of alternatives for certain business units, which positions Honeywell for future growth and value creation.
Future outlook and guidance. Looking ahead, Honeywell has updated its full-year guidance. What are the key highlights, John?
Honeywell raised its full-year sales guidance to $40.8 billion to $41.3 billion, with organic growth expected between 4% and 5%. They also increased their adjusted EPS guidance to a range of $10.45 to $10.65. This reflects their confidence in continued strong performance and strategic execution.
And how does their cash flow outlook look?
They maintained their free cash flow guidance at $5.4 billion to $5.8 billion, which is a strong indicator of their financial health and ability to invest in future growth opportunities.
Key takeaways. In summary, Honeywell has delivered a strong second quarter with impressive sales growth and earnings performance. Their strategic acquisitions and updated guidance indicate a positive outlook. John, any final thoughts?
Honeywell's ability to exceed expectations and strategically position itself for future growth is commendable. Investors should keep an eye on their continued execution and strategic initiatives.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Honeywell's performance in the comments below.